today's session, let us work out one more problem under dissolution of partnership firm with new adjustments. Problem: Ramya, Kavya and Divya are partners sharing profit and losses in the ratio of 1:2:1. Their balance sheet as on 31/3/2018 was as follows. Balance sheet: asset side, cash 15,000, debtors 15,000, stock 18,000, furniture 12,000, machinery 20,000, building 60,000. In the liabilities side, creditors 20,000, bills payable 6,000, bank overdraft 4,000, reserve fund 8,000, warnings loan 5,000, capitals of Ramya 42,000, Kavya 35,000, Divya 20,000. The total of balance sheet is 1,40,000. Below the balance sheet, on the above date, they decided to dissolve the firm. Assets realized as follows: debtors 13,500, stock 19,800, building 62,000, vehicle which was unrecorded also realized for rupees 4,000, and machinery realized at book value. Second adjustment: furniture was taken over by Ramya at a valuation of rupees 9,000. Third adjustment: creditors were settled at 10% less. Divya took over Vani's loan. Fourth adjustment: interest on bank overdraft due rupees 400 was also paid off. Last adjustment: realization expenses amounted to rupees 4,000. Prepare realization account, partners capital accounts and cash account. So, in this problem, there are three partners: Ramya, Kavya and Divya, and they will share profit and losses in the ratio of 1:2:1. Now, what and all information is given in this problem? Balance sheet is given as well as adjustments are given. We need to prepare three accounts: realization account, partners capital account and cash account. So, first let us prepare the format of realization account. Debit side as well as credit side. Both the side, one particulars column and one rupees column. Particulars and amount column in rupees under debit side as well as credit side. Now, when you are preparing realization account, the first step we need to record about the realizable asset under the debit side at their book values. Now, in the problem they have provided you balance sheet. Balance sheet we can find assets. From those assets, only the realizable assets you need to transfer to the debit side of realization account. Now, let us go to the asset side. First one is given cash. Cash is already in the realized form, no transferring to realization account. That cash amount 15,000, where it will go? Because we need to prepare separate cash account, there we have to record it as a opening balance. Next one is debtors. Debtors can be realized. Next one is stock. Stock also can be realized. Furniture also can be realized. Next for machinery. Machinery also can be realized. And buildings. Buildings also can be realized. So, except cash, other five assets like debtors, stock, furniture, machinery and buildings you can realize. So, we need to transfer all the realizable assets to the debit side at their book value under realization account. So, let us write one by one. 2. Debtors 15,000, to stock 18,000, to furniture 12,000, to machinery 20,000, to buildings 60,000. 60,000. So first step is done. Now let us record the second step, that is transferring all the external or outsiders liability under credit side of realization at their book value. Now go to the liability side and find out which are the liabilities belongs to the outsiders. One is creditors. Creditor is an outsider, so external liability. Bills payable is also outsiders money, so external liability. Bank overdraft, money withdrawn from more than the bank balance is called as bank overdraft. So how much more you have withdrawn, that we need to pay back to the bank. So again it is an external liability. Reserve fund, it is belong to the partner, so you need to record under partner's capital account. One is loan. Now here, who are the partner? Ramya, Kavya and Divya. Whether one is a partner? No. One is an outsider. One is an outsider. So one is loan, you have to record under realization account, outsider liability. One is not a partner because she is an outsider. So one is loan is an outsider liability. So you have to transfer to realized account, not under cash or bank account. Remember, only partner's loan we need to record under the last account, that is cash or bank account when you are preparing. At the end, other loans, outsiders loan, bank loan, etc., we need to transfer to realization account. Then we have to pay those loans which were given in the problem. Only partner's loan will go to the cash or bank account. So next one is capital. Capital belongs to the partner, so it will go to the partner's capital account. So which are the outsider liabilities are there? Creditors, bills payable, bank overdraft and one is loan. There are 4 liabilities. So liabilities you have to transfer to the credit side of realization account by creditors account. By creditors 20,000, by bills payable, by bills payable 6,000, by bank overdraft OD 4,000, then by one is loan. One is an outsider, so you transfer the amount to the realization account. So transfer of realizable assets and outsider liabilities are done. For transferring the realizable assets, what is the journal entry? Realization account debited to each realizable asset account. For transfer of outsider liability, what is the entry? Each liability account debited to realized account. So each liability is credited here. Asset shows always debit balance, liabilities always shows credit balance. Now after recording the assets and liability, now first you have to settle with the assets by selling the assets or by giving it to the partner. So there should be 2 adjustments, assets realized or assets taken or by the partner. So now let us find out what adjustments are given for the assets. On the above date, they decided to dissolve the firm. First one, assets realized as follows. Debtors 13,500, debtor is realized. Then stock 19,800, stock is realized. Vehicle which was unrecorded also realized 4,000. See, in the balance sheet vehicle is given, no. So it is called as unrecorded asset, but it is realized for 4,000. So when you are realizing, we have to record. Whether it is unrecorded also, we need to record. Unrecorded is nothing but which is not given in the books of the account. In the balance sheet it is not given, but in the adjustment it is given that it is realized. So we have to record the unrecorded vehicle also under assets realized. Then machinery realized at book value. Machinery is also realized. Machinery is also realized at book value. Building is also given in this problem, 62,000. So building is also realized. Debtors realized at 13,500. Stock is also realized 19,800. Buildings is realized for 62,000. Vehicle which was unrecorded realized, that is the additional one. Then machinery is at book value. Now which one is left out? Furniture is left out. Furniture is not realized. It is not given that realized. But let us further you read and find out any adjustment is given for furniture. In point B, furniture was taken over by Ramya at a valuation of rupees 9,000. So furniture is taken over. Furniture is taken over. Furniture is taken over. So all 5 assets there is an adjustment. 4 are realized and 1 is taken over. First we need to record assets realized. Assets realized when selling the asset. When you are selling the asset, firm will receive money, so it is an income. Which side you record? Credit side. So what is the journal entry for assets realized? Cash or bank account debited to realization account. So realization account is credited by cash account. Here which account is there? Cash account. Assets realized. Assets realized. So write one below the other. Which are the assets are realized? Debtors 13,500. Stock 19,800. Buildings 62,000. Unrecorded vehicle, this is the additional one which is not recorded in the books of account, that is 4,000. Then machinery realized at book value. Book value means balance sheet value. How much is there? Balance sheet 20,000. 20,000. So assets realized 5. One is additional is the rear unrecorded vehicle. So total of the assets realized is how much now? When you add all the 5 values, 13,500 plus 19,800 plus 62,000 plus 4,000 plus 20,000. So it is 1,19,300. 1,19,300. 1,19,300. Now one asset is taken over, that is furniture was taken over by Ramya at a valuation of 9,000. So by Ramya's capital account, name of the partner taken over. Assets taken over. What is the journal entry? Partner's capital account debited to realization account. So realization account is credited by partner's capital account. Furniture taken over. Furniture taken over. Furniture taken over. So all the assets are settled. Now what you have to do? You have to pay the external liabilities. What information is given in the problem about liabilities? One is creditors were settled at 10% less. Diya took over Vani's loan. Interest on bank order due rupees 400 was also paid off. Creditors is given, it is settled at 10% less. There is an adjustment for creditors. And Diya took over Vani's loan. Vani's loan is paid by Divya. Divya took over Vani's loan. Vani's loan is paid by Divya. Then they have given interest on bank overdraft due rupees 400 also paid. Additional information, that is interest on bank overdraft. But in the problem there is no adjustment for bills payable and bank overdraft. It is not given in the problem that bills payable is paid and as well as bank overdraft is paid. External liabilities, whether in the problem if it is not given also paid, then we have to pay the external liability because the money belongs to the outsiders. So when you are closing the business, we have to settle all the external liabilities. If in case if any asset, any liability adjustment is not given, then we need to pay all the external liabilities. Now in this problem there is no adjustment for bills payable and bank overdraft, but we need to pay the bills payable amount as well as bank overdraft to the bank. How much money more we have withdrawn, that we need to repay to the bank. So liabilities paid, which side? Debit side. What is the entry for liabilities paid? Realization account debited to cash or bank account. Realization account debited to cash account in this problem. Cash account. Liabilities paid. So which and all? One is creditors. Creditor is paid 10% less. So, what is the book value? 10,000 into 10% means how much? 2,000. So, book 2,000 20,000 minus 2,000. So, how much you have to pay? 18,000. Then bills payable, no adjustment, but we have to pay bills payable. How much? 6,000. If there is no adjustment, so you have to pay. Then bank overdraft also you have to pay. Firm has to pay bank overdraft. So then additional information, that is interest on bank overdraft. You can write together. You can add it to the bank overdraft also, or you can write separately. Bank overdraft. How much it is? 400. Bank overdraft is how much is given? 400. When you total, how much you will get? 28,400. 28,400. 28,400. You can write this together also. Bank overdraft and interest on bank of 4,400, or you can show separate one and the same. Then one liability is taken over. That is, one is loan took over. Divya took over one is loan. Means one is loan is paid by Divya. So to Divya's capital account. What is the journal entry for liabilities taken over? Realization account debited to partners capital account. Realization account debited to partners capital account. One is loan taken over. One is loan taken over. Divya's capital account. Divya has taken over the one means Divya has paid the one is loan amount. So that is 5,000. So you have to name of the partner. Then finally they have given realization expenses amounted to rupees 4,000. Expenses debit side to cash account. Realization expense to cash account. Realization expenses. Journal entry was what? For realization expenses paid. Realization account debited to cash account. Realization expense debited to cash account. How much it is? 4,000. 4,000. Realization expenses paid. Journal entry is what? Realization account debited to cash account. That is 4,000. Now we need to total and balance. We have to see which side is more, whether debit side is more or credit side is more. We have recorded all the 7 steps. Step 1 is transfer all the realizable assets to the debit side. Step 2, transfer all the external liabilities to the credit side. After that, whatever assets can be realized, that assets should be realized, or else that assets should be taken out by the partner. So third one is assets realized, and fourth one is assets taken over. Next one is liabilities paid, fifth one. Sixth one is liabilities taken over, and seventh one is for paying the realization or dissolution expenses. So after that, we need to total and balance the realization account. We need to see which side is more. So when add a debit side total 15,000 plus 18,000 plus 12,000 plus 20,000 plus 60,000 plus 28,400 plus 5,000 plus 4,000. So when you add, how much amount you will get? Debit side 1,62,400 debit side. Next add credit side 20,000 plus 6,000 plus 4,000 plus 5,000 plus 1,90,300 plus 9,000. You will get 1,63,300. So which side is more? Credit side is more. Realization account, credit side is more than the debit side, 1,63,300. So if credit side is more means what it is? Incomes are more than the expenses. So it is profit on realization. You will get profit here. So how to record it now? Now credit side is more, but balance your record under which side? Balance your record under debit side. So leave 4 to 5 lines to record the balance under debit side. 1,63,300. 1,63,300. 1,63,300. Total is 1,63,300. From that minus debit side total, that is 1,62,400. You will get balance 900. How much balance you will get? 900. 900. You will get balance 900. So, balance is how much? 900. You have transferred to which account? Partners capital account. To partners capital account. To partners capital accounts. To partners capital account. Who are the partners here? Ramya, Kavya and Divya. We need to transfer partners capital account according to their profit and loss sharing ratio. Ramya, Kavya and Divya. What is their ratio? Is 1:2:1. So write the balance amount, that is 900 into 1:2:1. 1 plus 2 plus 1. Total share is 4. How much Ramya is getting? 1/4. Next Kavya is getting 900 into 2/4. And last one Divya is getting 900 into 1/4. So Ramya, how much is the amount now? 900 into 4/1, 225. Kavya 900 into 2/4, 450. And Divya 900 into 1/4, it is 225. So total 900. So this 900 is what? Profit on realization. So nothing but profit amount. Profit on realization. Profit on realization. Now we are done with realization account. Next you have to continue with which account? Partners capital account. Now partners capital account. How many partners are there? 3 partners. So how many amount columns required? 3 amount columns. So partners capital account. Partners capital account. Three amount columns. Debit side and credit side. Both this side, particulars and 3 amount column. First partner is Ramya, amount. Second one is Kavya, amount. And last one is Divya, amount. Ramya, Kavya and Divya. Same way in credit side also. Particulars, Ramya, Kavya, Divya. Ramya, Kavya and Divya. So this is the format of partners capital. Now let us start recording all the information. First, in the partners capital, you have to begin with what? Opening balance. Partners capital amount you have to record, opening balance. Now go to the problem and find out how much capital is given. Capitals of Ramya 42,000, Kavya 35,000 and Divya 20,000. So capital, which side you have to record? Credit side, by balance brought down. Opening balance, which side you have to record? Credit side, by balance brought down. 42,000, 35,000 and 20,000. And 20,000. 42,000, 35,000 and 20,000. That is the opening capital balance. Now, after that, the balance of the realization account, you have transferred to which account? Partners capital account. Here what you got? Profit on realization. Now this you have distributed among whom? Partners according to their profit and loss sharing ratio. Now we have to transfer this to the partners capital account. What is the entry? Realization account debited to partners capital account. Profit on realization. What is the general entry? Realization account debited to partners capital account. Now we have to record that information in the partners capital account. What is the entry? Realization account debited to partners capital account. Partners capital account is credited by which account? By realization account. Partners capital account is credited by realization account. How much it is? 225, 450 and 225, 225, 450 and 225. Otherwise, in the realized account, profit which side you written here in partner's name, debit side. When in this information, when you are transferring to partner's capital account, we said it will go credit side, opposite side. That is 225, 450 and 225. After that, from the balance sheet, we have to record reserve as well as undistributed profit or loss, that is profit and loss account. In this problem, they have given reserve fund of 8,000, but profit and loss account is not given. There is no undistributed profit or loss in the problem. Only reserve fund is there. Reserve fund is there under liability side. Liability side information, which side you have to transfer? Credit side. Which side? Credit side by reserve fund account. By reserve fund. Total reserve fund is how much? It is 8,000. So 1:2:1, 8,000. 1:2:1. 1:2:1. So 8,000 into first partner 1/4. Total is 2,000. 8,000 into 1/4, 2,000. Second partner 8,000 into 2/4, 4,000. And 8,000 into 1/4, 2,000. So it is 2,000, 4,000 and 2,000. 2,000, 4,000 and 2,000. So there is no profit and loss account. So no recording. Profit and loss account is not there. So no recording. Next, what you have to record? We have to record the information from the realization account. So any assets taken over or liabilities taken over is there, that we have to record. Now in the realized account, when you go to the realized account, we will come to know. Here in the debit side, you have written name of the partner, Divya's capital account. For what? One is loan taken over 5,000. That is liabilities taken over. So where and all you have written partner's name, you need to transfer it to the partner's capital account. In the debit side of realization account, you have Divya's capital account 5,000 for one is loan taken over. That is liability taken over. Now this information because it is belong to the partner, we need to transfer it to the partner's capital account. So here which side you have written? Credit side, debit side. Now which side you have transfer? Credit side. By, from which account? By realization account, by realization account. Which partner's name is there? Divya's name. So write under Divya's column 5,000. 5,000. Divya's column 5,000. Anywhere else debit side partner's name is there? No. When you go to the credit side, so anywhere partner's name is there? Yes. Last. Ramya's capital account 9,000. That is for furniture taken over. That is for what? Furniture taken over. Furniture taken over. Now again it is belong to the partner, so we need to transfer it to partner's capital account. Here information there under which side? Credit side. Now which side you are transfer? Debit side. And from which account you are transferring? Realization account. So which partner's name? Ramya. So write under Ramya's column 9,000. So you can write furniture taken over or asset taken over. Furniture taken over. Here if you want you can write, this is for what? One is loan paid. One is loan paid. Or liabilities taken over also you can write. So now we need to total and balance the partner's capital account. We have recorded all the information belonging to the partner. So first what you have to record? Opening balance. Then realization on profit or loss. Third, reserve or reserve fund you have to record. Fourth, undistributed profit, that is profit and loss account. Then fifth, any assets or liabilities taken with it, that we need to record under partner's capital account. After that we need to total and balance. So which side is more? Credit side is more. By looking at the amount you can say credit side is more. No need of finding out. Just first you do the total of credit side. First partner 42,000 plus 2,000 plus 225. 44,225. So same total right under debit side 44,225. 44,225. Minus debit side one amount is there 9,000. Minus 9,000. How much you will get? 35,225 balance 35,225. 44,225 minus 9,000 balance is how much? 35,225. Next, Kavya. Total Kavya 35,000 plus 4,000 plus 450, 39,450. 39,450. Total is how much? 39,450. Minus debit side any amount is there? No. So balance remains how much? 39,450 only. 39,450 only. Last one, Divya. Total Divya's column 25, 27, 225. 27, 225. Same total right under debit side. Minus debit side amount, anything is there? No, 0. So balance will be 27,225 only. 27,225. Now, how to settle the partner's capital account? Now, here partner's capital account shows which balance? Credit balance. Means what? Credit side is more than the debit side. Partner's capital account shows a credit balance. Means credit side is more than the debit side. That is nothing but partner's capital account shows a surplus balance. Surplus balance means here partners will receive money from the firm. So firm has to pay money to the partner. How much Ramya will receive? 35,225. How much Kavya will receive? 39,450. How much Divya will receive? 27,225. Final balance. Paid to the partner. Final balance paid to the partner. 35,225, 39,450 and 27,225. So, after completing the partner's capital, then we have to prepare the last account. Which is the last account you have to prepare here? Cash or bank? Cash account. In this problem, cash is given. So, we need to prepare cash account. Debit, credit, particulars rupees. Debit side as well as credit side. Both the side, one particulars column and one rupees column. One particulars column and one rupees column. Now cash is what? Cash is an asset. Asset always shows which balance? Debit balance. So first when you are preparing cash or bank account, we need to record the opening balance of cash and bank. Because both cash and bank both are asset, asset always shows debit balance, so you have to record the information under debit side. Now find out the cash amount in the problem, how much it is? 15,000. Cash amount is how much? 15,000. So which side you have to record? Debit side. To balance brought down. Cash opening balance is how much? To balance brought down. Now, in the cash account, what and all money you are received, you have to record under debit side, and whatever all money the firm has to pay should be recorded under credit side. That how we will come to know? By going to the previous two accounts, realization account and partners capital account. Now let us start with realization account. Just check in your problem whether cash or return. Debit side of realization account, here cash is there. That is for liabilities paid. How much? 28,400. 28,400. Liabilities paid is how much? 28,400. Paid, so it will go to which side? Credit side. That is nothing but realization account debited to cash account. Now we are preparing cash account. So cash account is credited by which account? By realization account. By realization account. By realization account. How much is the total liabilities paid? 28,400. 28,400. Liability is paid. Liability is paid. So otherwise just look at here, cash you have written under which side? Debit side. Because this information belongs to cash, we need to transfer it to cash account. From the debit side it will go to which side? Credit side. From which account you are recording? Realization. So by realization account 28,400. Next, one more cash is there for realization expenses 4,000. So what entry you have passed? Realization expenses. Entry is realization account debited to cash account. Now cash account is credited by which account? Realization account. Cash account is credited by realization account. How much is the amount? 4,000. 4,000. That is realization expenses. Realization expenses. Realization expenses. Next, come to the credit side of realization account. Credit side of realization account. There is cash for assets realized. How much is the cash? 1,19,300. So you have received money here by selling the asset. So what entry you have passed for assets realized? Assets realized entry is what? Cash account debited to realization account. So cash account debited to realization account. $1,19,300. 1,19,300. 1,19,300 assets realized. Assets realized. Otherwise, say cash is there under realization on which side? Credit side. And this is information belong to the cash. We need to transfer it to cash account. From which side it will go? From credit side it will go to the debit side to realization account 1,19,300. Anywhere else cash is there? No. Now next partners capital account. We have settled the partners capital account by transferring the amount to cash account by paying the cash to the partner. Here cash is paid. So which side you will go? Credit side of the cash account. So what entry you have passed for settling the partners capital account? Partners capital account debited to cash account. So cash account is credited by which account? By partners capital account. By partners capital account. One by one you have to write the amount. So by first partner. Who is the first partner? Ramya. Ramya's capital account. By Ramya's capital account. How much is the Ramya's account shows balance? 35,225. Next by Kavya's capital account. $39,450. Next last Divya's capital account. By Divya's capital account. $27,225. 27,225. Now you have to record the balance of partners capital account because firm has to pay, so it will go to the credit side. So cash account is credited by partners capital account. So here you have written debit side cash. So when you transfer to cash account, you will go to the credit side, but you have to write the name of the account from which account you are transferring. So you have to mention the name of the partners here. So in this problem, before writing this amount, we have to check whether there is a partner's loan. But in this problem, partner's loan is not there. In case if any partner's loan is given, then that also you have to record under credit side because you have to pay the amount to the partner. So you have to record under credit side of cash or bank account. Before writing the partner's capital balance, we have to record the partner's loan amount. But in this problem, there is no loan amount in the problem, so no recording. So now what you have to do? We have to total and balance. So balancing cash account. Here remember one thing, cash or bank account, when you are balancing, you should not get any balance. Both sides should be equal because we are closing the business means what? We have to close all the books of accounts. We need to close the cash account also. When you are closing, you should not get any balance here. So 15,000 plus 1,19,300. So one total is how much? 1,34,300. 1,34,300. Now total the credit side 28,400 plus 4,000 plus 35,225 plus 39,450 plus 27,225. So how much you'll get? 1,34,300. 1,34,300. 1,34,300. So both this side you'll get same total. That means your problem is correct. So cash account debit side, what and all cash you received, that you record. You had already balance of 15,000 and by selling the asset you got 1,98,300. So total cash how much was there? 1,34,300. And that cash was utilized for paying all the liabilities and expenses and paying money to the partners. How much liabilities you have paid? 28,400. How much expenses realization expenses you incurred? 4,000. Then how much money you have paid to the partners? 35,225 to Ramya, 39,450 to Kavya, 27,225 to Divya. So you have used 1,34,300 to pay money to the liabilities, realization expenses and to the partner. So full money you utilized. So your cash account tallies both the side, debit side and credit side. How much you will get? 1,34,300. So like this you have to prepare final accounts under dissolution of partnership firm, that is realization account, partners capital account and cash account. So this is a very easiest chapter and very easy to record all the transaction. Main thing you should learn the first account, that is realization account. Here you need to learn 7 steps, that is assets realized, assets taken over, transfer of assets, realizable asset, then transferring the external liabilities, then assets realized and assets taken over, liabilities paid and liabilities taken over, then dissolution or realization expenses, then balancing the account. Then partners capital account, already you have studied in the admission and retirement partner, same thing you have to record, same thing you have to follow here also procedure. Only thing you have to remember is settling the account. Here no writing to balance carried on. You have to settle the partners capital account because you are closing the books of account by paying the cash to the partner, or if it shows a debit balance by receiving the amount from the partners, you have to settle the account. So by transferring the amount to cash or bank account. And cash account very easy. Just first we have to write the beginning, you have to write the opening balance. Then from the previous 2 accounts where and all you have written cash, that you need just transfer to the opposite side of the cash account. If you find journal entries difficult, then just you can transfer it going to the realization account and partners capital. Just you can transfer the cash information to the cash account to the opposite side. And remember, cash account should tally here, then only your problem will be correct. And no preparing balance sheet here. Remember, in the dissolution of partnership firm, no preparing balance sheet because you are closing the business and you are closing all the assets and liabilities. So there is no the assets and liabilities are not there, so you cannot prepare balance sheet. So hope all of you understood how to prepare realization account, partners capital account and cash account.